Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia.
I'm Tanveer Gill, and it was a pullback rally for the markets on expiry day. We'll talk about that in just a bit. Quickly get you a roundup of the key voices that you will be hearing from over the next half an hour. Rajiv Jain, CIO, Wantable Asset Management, will join us with his market views. Neeraj Diwan, Director, Quantum Securities, will talk about his market outlook, and Ashwin Gujral will take us through the technicals as the market attempts to sustain actually above 5,400. Let's get in a voice. One of the largest investors in Indian equities, Rajiv, is with us right now. Rajiv, have you altered your strategy over the last month while you were visiting India? Have you reworked allocations, book profits perhaps?
No, frankly, there was no change. I think if you look at our current positioning, we have significant exposure to 3-4 core areas, right? The first one is financials, the private sector banks, the HDFC, HDFC Bank, and so on and so forth. Then we have a couple of pharmaceuticals, obviously consumer staples, and a small portion in the IT services. In fact, we feel that the best opportunity today is more on in the financial services. That's where the biggest damage has been, especially the names that we own. Not necessarily making a big bull case on public sector banks or anything. We don't have any exposure there. So there was no really change from a couple of companies we met. So it wasn't really a big change of perception.
Ashwini, table thumping applause to your Nifty call. You were on the button. Nifty appreciated 3% yesterday. It rallied about 3% today. So what are the odds that Nifty now could add another 100 points tomorrow?
See, I'm not interested whether it happens tomorrow or day after. But one thing is clear, that we've made some sort of an intermediate bottom. And chances are, we will in the next few weeks get closer to 56, 5700. This is a very shallow market, needs very little buying or very little short covering to really run up on the upside or really come crashing down. The intermediate call remains 47, 4800. But for that, we'll have to again go up a bit, get some of the pessimism out of the way before the fresh leg of downside starts. This leg of downside is over, and chances are that we'll go up rather than down. There could be, some consolidation. Banks will need to pick up. Slowly, more sectors will participate. PSU banks will also participate towards the end of the rally. So just starting out, easily you could have a rally for the next couple of weeks.
Fair enough. Neeraj, come to you. How are you positioning yourself? The bounce back that we're seeing right now, are you reading into it more than what it seems?
Actually, we are still into a turmoil. Like yesterday, there was nothing positive we could think about. Everything was negative around us, whether it's currency, whether it's to do with Syria. Everything was going wrong yesterday. Today, our currency has definitely rebounded, and that is what is reflected in our markets also. Plus, being expiry day, there was some short covering also, it must have happened today. But going ahead also, I feel some consolidation needs to happen in these levels, because I don't think there's a case for a very big rally from these levels, because things are still very fluid. They're still very, it's not clear at all. So I think on the currency front also, we need to see whether today's up move in the currency is going to sustain or not. So I think we need to be careful at these levels, be very selective of where you put your money, and let things first get clearer on day by day, and then maybe can make a case for a bigger investment.
Neeraj, but if you will wait for the Robin, the summer will get over, and best trades are always made when the times are slightly desperate.
Yeah, that's what I said. Be stock specific. There are opportunities which are there. Which those opportunities can be cash, like capital goods stocks. Some of them really got beaten down. Even in financial private sector banks, some stocks really come down a lot. So be stock specific and definitely put your money, but be very stock specific at these levels also.
Rajiv, come to you from a valuation perspective. 12 times FY14 earnings and a 20% fall coming in the currency year to date. Does India not become a compelling buy then on both those parameters, especially for an FI like yourself, to start building more positions in the market, or really taking advantage of the rebound from here? Or do you think investors will give more weightage to macro risks than favorable valuations?
Well, I think if you look at emerging markets in general, everything has sort of been compressed, right? Multiples have come in quite a bit. So if you look at our global portfolio, we, just about a year and a half, 2 years ago, we actually cut back our emerging market exposure in the global portfolio significantly. We had over 20% plus. It went down to, I believe, 7-8%. It's actually beginning to go up in a whole bunch of different, areas. So because the valuations are good. So coming to India, I think India, this is fascinating, because if you look at last 20-25 years, this sell-off has started when the multiples were pretty low compared to historic norms. In fact, valuations today are lower, or actually the valuations, the peak of this sort of sell-off were lower than the trough of the 2008, right? So, and that's why I feel pretty comfortable that the valuations are attractive enough for us, especially from in the quality space. Now, clearly not everything has been hit. Quality has held up better, but that's how quality is supposed to behave, because people say, hasn't quality outperformed? Well, the question is, how do you define quality, right? I mean, quality is defined by how well the business holds up and how well the management behaves during stressful times. So I think it's from our perspective, we like a bunch of things. So our exposure has actually increased over the last few weeks.
Ashwini, if I look at individual stocks, for the August series, there are two standout gainers, Ranbaxy and Sesa. What is your take on both these stocks? Because both of them are up more than 30%. That's a big move in in the August series.
Well, if you wanted to ask me which were the two stocks where I thought their bear markets are over, these are probably those two stocks. And Sesa is now not going up because it is being added to the Nifty, but maybe there is some expectation that Goa mines, etc., may be reallowed. So basically, once everybody has sold, and Sesa basically everybody was out of it, and now these stocks are going up with such velocity because shorts are getting covered, fresh buying is coming in. So both of these stocks can head up at least another 20-30% from these levels, and clearly both these stocks have emerged out of their respective bear markets.
Oh yes, indeed. And like we were pointing out, HDFC, Sesa, Ranbaxy, some of the big movers in the August series. From the financials, Neeraj, what's the view? I mean, where is it that you're placing your bets? Because from a valuation perspective, HDFC Bank would seem very attractive.
Yeah, I think all the financial stocks have fallen a lot. We're still not bullish on PSU banks. I think they still have a lot of risks which are concerned, and seeing the current turmoil, the risks might have increased there. But the private sector banks there, I think there's a lot of value. Whether it's HDFC Bank, which is of course a premium stock, which is also corrected. Then ICICI Bank is also looking very attractive. Even the results, last 7-8 quarters that you see have been pretty decent. Even the last quarter where there was stress across, ICICI Bank came out with a decent set of results. So ICICI Bank can be one. Then there's Federal Bank also, where it's trading below book value. So there are pockets there which are looking attractive, but I'll prefer the private sector banks or the public sector banks even after these beaten down valuations.
Neeraj, come to you. I mean, aside of banks, the story that's really playing out with the market, and something that we saw on the futures and options side is the build-up that we're seeing in IT as well as some of the metal counters. Is that trade still running course?
I think as far as metals is concerned, I think there might be still some more upside. I think even a lot of these companies which got affected because of the mining bans which had happened, I think there's a view that because the government is all out to do something about revival in the economy, and that might be one step that they might take. So I think there's some more upside which might be there in the metal stocks. And as far as IT is concerned, I think though there's some upside will be there in a couple of large cap quality names, but I think one needs to get a little careful now as far as IT is concerned. Though over a long term, I still have a positive view, because if US is recovering, IT will definitely benefit. But I think in the short term, I think the rally might have been a little stretched now. So one needs to be a little careful and invest only in dips as far as large cap IT is concerned.
Right. Let's talk about HDFC. Ashwini, what are your thoughts on HDFC? It cracked strongly on Tuesday, it stabilized yesterday, and today it was the biggest gainer on the Nifty.
See, let's be clear, banking is in a big bear market. So is HDFC, so is HDFC Bank. So it does not matter whether, it's a pedigree name or not. It will fall probably less than PSU banks, but it will fall. It will go through its own pullback rally. Chances are that pullback rally may take it up to 770, 780, even a 100-point pullback rally is possible. But it should be clear that there could be lower prices ahead in the coming months. Nobody should assume that India is about banking, etc. All sectors go through bear markets, and this is a banking bear market, so be very careful of any kind of bank.
Rajiv, the damage to the banking space has been incredible. The bank Nifty has fallen in excess of 25% year to date, where the Nifty's fall has been in excess of closely about 10% or so. Why? I mean, what would you attribute to the underlying weakness in banks right now? Why the big underperformance? What's your view on the PSU private bank trade? And also, what's the broad view on the sector as a whole?
I think the way you look at it is that you have to sort of value them on a through the cycle basis, right? So even if you do some sort of sensitivity analysis and say, well, the NPLs are going to go up by X or Y, these stocks still look pretty attractive. And I'm talking about specific names. I'm not making a case for each and every financial. So if you look at, for example, HDFC Bank, would they be better off because of crisis or not? And we would argue that they would be better off than on a relative basis, right? But on an absolute basis, they will be worse off too. Same like ICICI, same like Axis, or HDFC Bank, or Housing Development Finance Corporation. But on the valuations, things are a heck of a lot better. So 5 years ago, when everyone was excited about some of these names, they were selling at very high multiples. So I think to what I'm saying is that I'm not disagreeing with what you're talking about in terms of deteriorating the fundamentals. But the fundamentals are not deteriorating as rapidly as the market price are corrected. And the correction has been happening over the last 5-6 years. As I said, if you look at HDFC Bank, their earnings are probably up 4x over the last 5-6 years. Right? 4 times. Where's the stock? The stock is, in dollar terms, pretty much trading where it was. So it is up a little bit. But there has been significant multiple compression. So if the outlook was good, do you think the HDFC Bank would be trading at these levels? Of course not. So what we are saying is that, yes, there are problems, but on 3 to 5 year basis, the valuations are more than enough attractive for us to sort of own them or incrementally add to them. And as I said, we've sort of added incrementally in the whole bunch of these names over last couple of weeks.
Ashwini, today Lupin also made a good comeback. 40 rupees of Lupin closed at 810 rupees. Now Lupin is a bull market stock. Do you think bulk of the short-term correction in Lupin is over?
Yeah, I would think so, and Lupin has had a bigger correction than you generally had with the tech stocks, and that is where the opportunity for a medium-term player comes in. When something corrects down from 900 to 750, that's a fairly decent correction, and from here I think Lupin can be bought. Chances are it will retest its previous highs of about 900. And then we take it from there. It's still, the 200-day moving average around 680. So if you can use that as some sort of a stop, chances are you will get a 1:3 type of a trade.
All right. Neeraj, I come to you on some of these pharmaceutical names. What are your top bets there?
I think, all the quality names in the pharmaceutical companies have also corrected. Lupin is definitely one of them, and another one would be Cadila, where Cadila has also corrected with the markets, and I feel Cadila at this price should be a decent bet to hold.
A quick lowdown on stocks to watch out for tomorrow, first day of the new series. Gargi, what is on your watch list?
Well, firstly, it's Coal India. Remember that the divestment that the government was looking for, in fact, that had been put on fast track. They are planning to sell 5% stake via the OFS route. They've in fact appointed the bankers, and today itself we've got the news of SBI Caps, JM Financial, Kotak, Goldman Sachs and a few others like Deutsche Bank. Those are appointed as the 7 merchant bankers for managing the Coal India OFS. Like I mentioned, 5% stake sale is what the government is looking at. If you take the current market price, close to 8,000 crores is what the government can really garner from this particular issue. issue, and the government currently holds 90% stake in the company. They were looking at a 10% OFS, but due to all the issues with the labor, etc., that is happening at Coal India, they have decided to go with the 5%. By next month, we believe sources are telling us that we will see a finalization of this issue coming through, and the government really needs that money right now. So 8,000 crore worth of an OFS that we may expect from Coal India very soon. Also look at few of these cement counters, an ACC and an Ambuja, these two could be in focus. We had seen some pressure on these stocks in the last couple of sessions. Remember, on a month-on-month basis, we've seen price declines of almost 4% on cement. 275 rupees per bag is the prices right now. And the decline has been most in central India. Analysts have said that it is more than the decline, in fact, in prices is steeper than what they had expected. So remember, while costs have been rising, power costs have been going up, and the coal prices, the imported coal prices is going to rise considering the rupee depreciation. Coupled with that, the decline in cement prices, that's not going to augur too well for the margins in the second quarter. We already know margins were under pressure. Q2, if probably, is going to be worse. These stocks are going to continue to be under pressure, so keep an eye out for these counters.
Kanhaiya, thanks a lot for that. Neeraj, at the current juncture, what are your classic long-term buy ideas? Where are you allocating money for the long haul?
I think there are a lot of good balance sheets, also good companies which have corrected in this market. I will go only with companies which have decent balance sheets. So Cummins is one of them in the capital goods space, where they have a very good balance sheet, very good return ratios. So Cummins can be one which can be bought for a little long-term perspective. Rallis is another one which should benefit because of good monsoons also. So Rallis is the second one which you can look at. But this kind of a market, one has to keep in mind that one needs to have a holding power. So if you have a holding power to invest and keep for a couple of years, then you invest at these levels, because you will definitely see ups and downs in the market even in the next couple of months.
All right, Ashwini, come to you. What about your specific recommendations?
Well, while we are talking, rupee has corrected to 66.50. So that means if rupee starts correcting, the market rally will get more steam. So Lupin is a buy with a stop of 790, target of 840. Hindalco is a buy with a stop of 102, target of 116. JSW Steel is a buy with a stop of 562, target of 590.
Ashwini, just for the benefit of our viewers and so that there is no confusion here, rupee has appreciated. Is it time now to get out of IT and time now to revisit banks, or IT is in a bull market, it will do well irrespective of rupee?
Well, if IT corrects because rupee appreciates, then probably you should buy into it if you are not already in it, because all these are corrections from overbought levels. And finally, unless the trend changes, I don't think much will change with the IT stocks. In fact, people are so eager to buy IT, it may open down like it did today, and you will immediately find buying coming back, because these corrections are just linked to the market action. I don't think fundamentals are really changing either on the rupee or on IT.
Rajiv, from the holdings that you have in financials, HDFC Bank, ICICI Bank, Kotak Bank for that matter, you think that this fall is a good opportunity to hold or accumulate these names?
Well, I think again, without specifically naming one or two names, if you look at our holdings, what we own, we have not sold anything. We feel that that they still offer very good longer-term growth opportunity, but there's quite a bit of pessimism being priced in these names. Will these banks would have to take a haircut in terms of delinquencies going up? Why not? But would the franchise be around and in a better shape in 5 years? We think so. So, there's a reason why these stocks are trading at these multiples, and they can easily go lower, by the way. So I'm not making a call that, they can't go lower. But our question is, well, even if, let's say, HDFC goes down by 20% from here, right, over next 2 months, does it change our view? Not really.
Neeraj, Rajiv, Ashwini, gentlemen, thank you for joining us on this edition of Markets Tomorrow. That's it on the show. It's goodbye from Tanveer and me. Thank you for watching this edition of Markets Tomorrow.